Good day everyone and welcome back to another lesson with me, Jabulani Shabalala. If it's your first time here, please ensure that you watch previous videos. We will be covering Learning Unit 4, Cash Journals. Before we continue with the lesson, here is a quick test yourself quiz. What is a source document? What does PCV stand for? What source document do we give a customer who has purchased inventory from us? What is a duplicate? In this learning unit, we will be discussing cash journals together with general journal. A journal is a table used to summarize similar transactions so as to facilitate fewer postings in the bookkeeping system. There are three cash journals which we will be dealing with in this module: the cash receipts journal, cash payment journal, and the petty cash journal. In the three journals, only cash is involved except for the petty cash journal. For a transaction to be captured under the petty cash journal, funds from the petty cash box should be in use. We are going to start with a cash receipts journal, which is a journal we use to record all transactions that increase our bank account. Just remember this: receipt means receive. In this journal, we are receiving money which is eventually increasing our bank account. We will use transactions that we have previously used to show you guys how everything relates with one another. This is a framework for the cash receipts journal. Doc is the document number used in the transaction. Day is the day that the transaction occurred. Details is where does the money come from. If it is from selling, then we will have cash sales under details. Analysis of receipts is the company's cash register roll or till. We record amounts received in the form of cash directly in the business. Bank, we record amounts that increase the bank account. On the sundry account column, we record any account that is not part of the main account of the business. The next journal is the cash payment journal, which is a journal we use to record all transactions that decrease the bank account. In this journal, we are making payments or buying something using cash or EFT. Remember that when you buy something using cash or EFT, this decreases funds in your bank account and eventually bank will decrease on the credit side. The framework has few changes from that of the previous journal. Under details, we record name of the person we paid or bought from. Bank, we record the amount that decreases the bank account of the business. Wages and purchases will change depending on a framework provided to you. Purchases is used in the place of inventory. Sundry account is the same for all journals. A company will use funds in their petty cash and not necessarily cash. Anything that we purchase using petty cash will decrease the petty cash box on the credit side. In this journal, we record all transactions with a source document petty cash voucher. The columns for petty cash journal are the same as the previous journals, but under details we record what was purchased. This is any item bought by the company. Petty cash column, we record an amount that will decrease the petty cash of the business. Stationery and staff refreshments are main accounts and would change according to a question you are given. The last journal that we will be discussing is any transaction that is not part of the three journals we discussed previously. This means that we would not record any transaction that decreases or increases the bank account under the general journal. We will not record any transaction that decreases the petty cash box because that should be recorded in the relevant journal. The format of this journal is different and has what we call journal narrations after every entry. Date is the date that the transaction occurred. Document number will always be JV, which stands for journal voucher. It is a source document used all the time for transactions recorded in the general journal. Details, you write the two accounts affected on that transaction and always start with a debit entry followed by a credit entry. On the credit and debit, we record amounts that decrease or increase accounts. We will start with the first journal, the cash receipts journal, and the first entry's transaction is the following, which occurred on the first day of the month. The owner, Mr. Charles, contributed 40,000 Rand from his personal account to the business's account. Remember that we do not care about the owner's bank account, but the business's bank account, which means that we only record what the business received from the owner. Bank statement will be used as a document number because the bank statement will be in use to see the entry. Day 1, details will be Mr. Charles because we have to state where the money comes from. Bank, we will record the 40,000 Rand because it increases our bank account. Sales, we won't record anything because we did not sell anything in this transaction. Sundry account, we record 40,000 Rand and the account is capital. The second transaction occurred on the second day and it says, received 13,000 Rand from Bheki Mbele, a tenant. Bank statement document number will be the bank statement. Day 2, details, Bheki Mbele, bank, 13,000 Rand, and then sundry accounts, 13,000 Rand. Account will be rent income. Remember that a tenant will be paying rent to us, therefore, this will be part of money we receive for the rent. Transaction 3 occurred on the 5th day of the month and it says, sold inventory for 18,250 Rand cash and issued RCT 40 for this. The document number in this case is stated as RCT 40 and will be shown as such on the journal. Details, we will have cash sales because the money comes from cash we received from selling. Analysis of receipts, we record 18,250 because it is money we received in our cash register roll for the sale. Bank will also be 18,250 and cash sales we will record 18,250. Sundry account, we won't record anything because sales is part of the main account. The last transaction took place on the 10th and bank statement is the document number. The transaction says acquired a loan from Cap Bank for 280,000 Rand. Details, we will record Cap Bank column will record 280,000 Rand. In sundry account, we will record 280,000 Rand under amount and loan as an account. You will tally all columns as per instructions. Analysis of receipts, 18,250. Bank, 351,250. Sales, 18,250. An amount under sundry accounts will be 333,000 Rand. Cash payment journals transactions mean that they all decrease funds in our bank account. First transaction under this journal occurred on the 7th and it says paid Santos 34,700 Rand for equipment previously purchased on credit via EFT. Document number will be EFT. Day 7, details Santos because we paid Santos the money. Bank 34,700 Rand and sundry account amount will be 34,700 Rand and account creditors control. In this transaction, we are not buying for cash but paying our creditors who we previously bought from on credit. Transaction 2 occurred on the 9th and it says purchased inventory for 130,400 Rand from Pepper Traders and transferred funds via EFT. Document number will be EFT Day 9, details Pepper Traders and bank column 130,400 Rand. Purchases 130,400. We are using the periodic inventory system. Therefore, we won't use inventory but purchases as the second account. Last transaction happened on the 12th day and details we will have RC Motors, bank 530,000 Rand and sundry account the amount will be 530,000 Rand accompanied by the account vehicle. Totals are as follows. For bank 695,100, purchases 130,400 and sundry account 564,700. The next journal we will discuss is the petty cash journal and has 2 transactions. One happened on the 6th and says used funds in the petty cash box to purchase muffins for a staff meeting 690. PCV was in use. Day will be day 6. Details, we will have muffins because this is what was purchased. Petty cash 690. Muffins are regarded as staff refreshments and therefore we will record the 690 Rand under staff refreshments. The next transaction says purchase pencils and erasers for 850 Rand. PCV2 was in use and the transaction was on the 13th. Document number is PCV2. Day 13 is recorded under day and details pencils and erasers as that is what was purchased. Petty cash 850 Rand and sundry account the amount will be 850 while the account recorded is stationary. Remember that both pencils and erasers are stationary for the company. Then balancing their columns we will have 1,540 under petty cash column, 690 under staff refreshments and 850 under sundry accounts column. The last journal is the general journal which has only one example and 2 accounts affected. The transaction was on the 8th and it says, owner took a couch and decided to put it in his study area at home. The couch was worth 11,250 JV1. Date is recorded as 8 and document number is JV1. Details: we will have two accounts, drawings and furniture. Drawings account is debited as it decreases the worth of the company on the debit side, and furniture is credited because this is an asset that was taken away from the business premises for personal use. If we were receiving an office couch, then we would have debited the couch, but in this case, it has been taken away from our records by the owner. Debit drawings 11,250 and credit furniture 11,250. You should also have a journal narration, which is where you briefly explain what happened in a transaction. Our journal narration for this entry will be: owner took a company couch for his personal use. Remember that we tell stories differently, and therefore journal narrations will be different for every student as long as it explains what happened in that specific transaction. Every company should make use of journal because they assist bookkeepers in recording cash inflow and outflow. I hope you enjoyed this lesson and found it very helpful. With that, continue to speak the international language of business. Until next time, goodbye.